Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities trended mixed over the past week, with developed market equities rising for the fifth straight week as bond yields continued to decline amid softer inflation prints in US and Europe, and rising US weekly jobless claims driving expectations of a likely peak in policy rates going ahead. Asian equities lagged peers after data showed China's manufacturing activity contracted for the second month in November. For the week, the MSCI Asia ex-Japan and MSCI China index fell 0.3% to 2.3%, while the MSCI World Index rose 0.8%. In the US, the Dow Jones Industrial Average, S&P 500 Index, and Nasdaq Composite Index rose around 0.4% to 2.4% over the past week. Back home, Indian equities gained for the fifth consecutive week, with India's market capitalization of listed equities crossing the USD 4 trillion mark for the first time. The Nifty index gained 2.4% for the week, touching a new all-time high, driven by positive global cues, strong domestic macro data, improving foreign investor inflows into equities, and in line with consensus exit poll predictions for the state elections. Broader markets outperformed Nifty this week, with the Nifty Mid-Cap Index up 3.2%, while the Nifty Small-Cap Index was up 3% for the week. Among sectors, all sectors ended the week in green, with utilities, capital goods and energy leading the rally with gains of over 3.5% for the week. Indian fixed income market came under pressure over the past week, with government bond yields rising across the curve, driven by a sharp decline in banking system liquidity and market expectations of higher inflation print over the coming week. The 10-year Indian government bond yield rose 2 basis points to close at 7.29%, while the 3-year and 5-year Indian government bond yields rose by 1 basis point and 2 basis points respectively. The INR appreciated marginally over the past week to close at 83.3 per US dollar, supported by strong domestic macro data, lower US bond yields, and improving foreign investor inflows into equities. Brent crude fell sharply towards the end of the week to post a weekly decline as OPEC Plus voluntary output cut decisions for 2024 met with investor skepticism. Among the macro updates for the week, the first was on India's second quarter fiscal year 2024 real GDP growth, which came in at 7.6% year-on-year, higher than both 7.8% growth in the previous quarter and Bloomberg consensus estimate of a 6.8% growth. Real gross value added also grew for the quarter at 7.4% compared to a 7.8% growth in the previous quarter. Nominal GDP growth came in at 9.1%, higher than an 8% growth recorded in the previous quarter. On the expenditure side, big boost came in from fixed investment, which contributed 3.8% to the overall growth, and government expenditure, which contributed 1.1%, while net exports was a drag, contributing a negative 3.6%. Private consumption growth declined to 3.1% year-on-year in the second quarter from a 6% growth in the previous quarter. On the production side, the growth in gross value added was driven by manufacturing sector, which accelerated to 13.9% year-on-year from a 4.7% growth in the previous quarter. Construction and mining growth also accelerated at 13.3% and 10% year-on-year for the quarter. On the other hand, services sector growth declined to 5.8% year-on-year in the second quarter from a 10.3% growth in the previous quarter, driven by a broad-based decline in all the three subsectors, while agriculture growth declined to 1.2% year-on-year from a 3.5% growth recorded in the previous quarter, largely due to the impact of uneven monsoon. The second data was on India's manufacturing PMI, which rose to 56 in November of 2023 from October's 8-month low of 55.5. This was the 29th straight month of increase in factory activity as output expanded at an above-trend pace. New order growth improved from October's one-year low, while foreign sales gained sequentially. Further, employment increased for the 8th month amid a slight rise in outstanding business. On the price front, purchase costs went up the least in 40 months, while charges rose modestly. Lastly, confidence dipped to a 7-month low, largely due to rising inflation expectations. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.